Hello, everyone. I know we still have folks streaming into the room. It is my immense pleasure to be here today to kick off this really important conversation. Before I talk a little bit about what we're going to cover today, I just want to take a moment to thank so many of our partners who you're going to hear from today. In particular, three people are heroes to me, which is Ron Busby, who's the president and CEO of the U.S. Black Chambers, Inc., Xiling Tong, who's the president of National ACE, and Romero Cavazos, who is the president of the U.S. Hispanic Chamber. About 2 years ago, those three individuals and about 40 to 50 other small business leaders, advocates, folks from philanthropy and corporations gathered on a Zoom call just like this. At that moment, we really had no idea what the future of the world was going to look like. The country had just gone into lockdown, but we knew that there were going to be lots of questions for small business owners and main streets across the country. And in that moment, those three people and all of those advocates, those people who came to this conversation sprung into action, and that we knew that we would organize to do what we do best, which is to really be a voice for main streets and small business owners across the country. And through that conversation, Reimagine Main Street was born. And 2 years later, here we are. We've been having monthly meetings. The network has continued to grow. We've continued to have multiple events like this with policymakers and corporate leaders and hearing from a number of perspectives. We've been delivering amazing insights and research that have informed the way that our public policy response has gone. It's informed the way that corporations have acted. And so many of the tireless advocates who you're going to hear from today continue that work, because while we know that many small business owners are doing better, we know that there's still a lot who aren't, and there's a lot more work to do. And I think in the research that we're going to hear about today, we're going to hear about something that we know is so critical, which is access to capital, how important it is, particularly for entrepreneurs of color. This research couldn't be more important. It couldn't be more timely. In particular, I love what the team at RMS is doing, because they are breaking the research down by race and ethnicity, which allows us to make better public policy decisions. It allows us to be better advocates. It allows us to better inform the market. And so excited for the conversation today. And we're so grateful to also be joined by several leaders from the private sector who will share their perspective about where we are. So if we could go to the next slide, I'll just quickly cover what we're going to hit today. We're going to hear highlights from the survey that we released that is up and available on our website, but we'll go through those. We're going to hear from those chamber CEO, amazing leaders and heroes that I heard about. And then we're also going to hear from some friends from the private sector who are working on this issue, as well as we are incredibly fortunate to be joined by Patrick Kelly at the SBA, who, as many of you know, have been working his whole career to help solve for some of these issues. And then lastly, we are so pleased, especially during AAPI NHI Heritage Month, to be able to hear closing comments from Congresswoman Judy Chu. So with that, let me get out of your way and turn the program over to an amazing friend and colleague, Tammy Halevi, who has also just been a bedrock of insights as she has been working to lead not only this research project, but over the past 2 years, lead so many of the amazing research that we've been able to do collectively. And today she's going to give us highlights from the research as well as lead us in conversation. So Tammy, thank you for your leadership. Thank you for the work you're doing. And with that, it's my pleasure to turn the conversation over to you.
Thank you so much, Rhett, for that warm welcome. It is a joy and a pleasure to work with you and the team and all of our partners. As Rhett said, I am Tammy Halevi, and on behalf of the team at Reimagine Main Street and all of our partners, it is my great pleasure to also welcome you to today's timely and important conversation, trust and access to capital. As Rhett described, Reimagine Main Street is a multi-stakeholder cross-sector initiative, and we're focused on ensuring an equitable recovery from the economic effects of COVID-19 for small businesses and the people they employ across MLK Boulevards, Cesar Chavez Ways, Chinatowns, and main streets across the country. As you know, this session is one in a regular series of events that we host to engage policymakers and small business owners and small business ecosystem participants across the country in dialogue. Today's event and everything that we do at Reimagine Main Street would not be possible without the collaboration and thought partnership with National ACE, the National Asian Pacific Islander American Chamber of Commerce and Entrepreneurship, USBC, which is the US Black Chambers, Inc., and the United States Hispanic Chamber of Commerce, and of course, the Public-Private Strategies Institute. You will hear directly from the fierce advocates and extraordinary leaders of these three organizations in a few minutes, but I want to express my gratitude for the strong working relationships our teams have developed and the important work that this collaboration represents. The idea to field this survey and the insights that emerge from the work would not be possible at all without our partnership. With that, let's talk about the survey. As we all know, because we lived through it, the last 2 years have taken a tremendous toll on small businesses. And to be clear, challenges persist for many entrepreneurs. We know that in this challenging environment, small businesses that don't have a financial cushion or a source of external financing remain at risk. Against this backdrop, we wanted to better understand the capital needs of small business owners and to assess the confidence they had in their ability to meet those needs. We also wanted to take a pulse on attitudes towards a range of institutions where they might turn for capital. In a nutshell, we wanted to know who small business owners trust, because we know that trust is the basis for virtually everything that we do as citizens, as people, and as business owners. It is the ultimate currency in the relationship that financial institutions and government seek to build with customers and constituents. So last month in April, we and our partners fielded a national survey. As you can see, this effort yielded more than 2,500 responses, including more than 200 AAPI business owners, more than 900 Black, African American, or African business owners, more than 300 Latino, Latinas, more than 60 Native Americans, and more than 800 white business owners. This broad sample reflects the richness and diversity of small businesses. Respondents include sole proprietors and businesses with up to 100 employees. Every state in the nation and the District of Columbia is represented, and the industry mix is very broad. Before we go into the conversation with our guest lineup, I want to share some findings. And let me just call out that the full survey report is available on the reimaginemainstreet.org website under the tab called Insights. So, what did we find? First, most entrepreneurs of color lack confidence that they could finance an unexpected operating expenses or go after growth opportunities, including contracts, marketing campaigns, or hiring additional workers. Second, it's important to note that the capital needs of these entrepreneurs are relatively modest. 69% were seeking credit in amounts of less than $100,000. There are a range of lenders these entrepreneurs could turn to, including community development financial institutions and minority depository institutions or minority-owned banks and responsible fintech lenders. But these sources of capital and guidance are not familiar to most entrepreneurs of color. You'll see in the news that we did not, that there was one thing that we didn't expect to hear, given what we read about in terms of waning trust in government. And that is that the SBA, the Small Business Administration, was both the most familiar institution to these business owners and the most trusted. We think the SBA should use its newfound position of trust among business owners to connect them to private sector resources, including community financial institutions, responsible fintech lenders, and banks that can meet their needs. With these top lines, let's dive in a little bit to some of the more specific findings. So we wanted to get a sense of how confident small business owners are about their ability to fund an unexpected $5,000 expense. So think about a busted refrigerator or a downed website: frequent, urgent, and unexpected. As you can see from this slide, most entrepreneurs of color did not think they could find the funds either from cash they had on hand or from external financing. As you can see, Black, African American, or African business owners expressed the least confidence. We also asked several questions about common growth opportunities where businesses need working capital. As you can see here, most entrepreneurs of color lack confidence that they could finance a contract or a purchase order. This is an especially important finding as opportunities from the bipartisan infrastructure law come online and other contracting and supplier diversity initiatives are underway across both the public and private sector. We also see that across race and ethnicity, small business owners report similar rates of confidence that they could get external financing. That said, we see up to a threefold difference in the rate at which white entrepreneurs say they have sufficient funds on hand compared to entrepreneurs of color. This highlights differences in the underlying financial health of small businesses in the wake of the pandemic. So that gives you a flavor of the capital needs. When we explored familiarity with different sources of capital, we saw some interesting differences. As you can see here, the SBA was the most familiar across the sample, with banks and credit unions also having high rate of familiarity, as you would expect. But for about half the respondents, they were not familiar with community development financial institutions or minority depository institutions, banks that are at least 51% owned by AAPI Black or Latino people. And more than 40% of respondents were unfamiliar with fintech or online lenders. Given that CDFIs and MDIs are typically well positioned to provide both capital and guidance in a culturally connected way, and fintech lenders are able to use technology to improve the customer experience and unit cost economics of underwriting small dollar loans, we see there's an opportunity to close this awareness gap to better meet the needs of entrepreneurs across the country. Finally, in findings that honestly we did not expect, trust in the SBA is high among small business owners in the wake of the massive COVID relief programs. We see and hear so much news and commentary about diminishing trust in institutions, especially government, that we did not expect that more than 3 in 4 AAPI, Black, African American, or African Latino or Latina small business owners reported that they in fact trust the SBA. We think these findings are interesting and important, but what is far more important is what these findings actually mean in the real world. We could not have assembled a better lineup of people to help us make meaning from these findings. I am now delighted to welcome 3 fierce advocates for small business and distinguished voices in the Black, Latino, and AAPI business communities to the conversation. These 3 leaders hardly need an introduction to this audience. With us are Ron Busby, Sr., President and CEO of the U.S. Black Chambers Incorporated, Ramiro Cavazos, President and CEO of the U.S. Hispanic Chamber of Commerce, and last but only alphabetically least, Xiling Tong, President and CEO of National ACE, the National Asian and Pacific Islander American Chamber of Commerce and Entrepreneurship. Ron, Ramiro, and Xiling lead organizations that are both influential in Washington and trusted by business owners throughout the nation. Welcome to the 3 of you, and thank you so much for your partnership. Let's hop in. So each of you and your organizations are fierce advocates and are deeply committed to advancing businesses owned by AAPI Black and Latino business owners. That the pandemic hit small businesses hard and access to financing is a challenge certainly isn't new news, but we were struck by many of the survey findings and are excited to hear from you all. Ramiro, let's start with you. The survey found that business owners generally lack confidence in their ability to access relatively small amounts of capital. Fewer than 2 in 10 Latino or Latino-owned businesses expressed certainty that they could access $5,000 in a pinch for an unexpected expense. Does this finding surprise you? And honestly, what do you think it means?
The finding, and Tammy, thank you for being our bedrock also. And if as Rhett said, you're our bedrock, you're iron ore for all of us. So thank you so much. And thank you, Rhett, for SSPI putting this together. And I'm honored to be here with Xiling and Ron. These findings are not surprising. The only finding that is surprising is the level of confidence in the Small Business Administration. But I'm glad to see that. But as a general rule, small business owners, even non-African American, Asian, or Hispanic business owners struggle with being banked. And so I'm glad to know that we have our representatives from PayPal and Wells Fargo here to hear this conversation and for their investment in this discussion. Small businesses in general struggle with having enough cash flow. When you start a business, you all know it takes 18 to 24 months to even break even, and you're still catching up. And so being banked, more than 50% of our minority businesses are not banked. Even before the pandemic, they were struggling with cash flow for those unexpected big expenses that might not seem big to others, but $5,000 is a big expense. So we're not surprised with the fact that the discrimination and quite frankly, racism that occurs when decisions are being made as to who to lend capital to prior to the pandemic, that has been a longstanding challenge. Plus, many of our businesses are first-generation businesses. They did not inherit their wealth, and that's clearly another challenge for Hispanic-owned businesses. The last point I would make is what we learned through the pandemic is that we're more interconnected than we were before, and I believe the increase in confidence in asking questions, asking for help, reaching out to the Small Business Administration or any one of our national minority small business partners here with your help is really going to be the form of how we operate moving forward. I'm glad that there are more than 5,000 SBA certified lenders now, when before the pandemic, there were fewer than 800. And so the environment has changed. The ecosystem is getting better, but our small business owners have taken some hits, as you all know, the last couple of years, in spite of the support of the SBA through PPP and the Restaurant Revitalization Fund. So not a big surprise with that. Capital continues to be the greatest need for small businesses in general throughout the country. And we're doing our part here with you all to make sure that we are creative, but we also work with fintechs and community banks, CDFIs and banks to really make those investments, because that's where the future of the recovery will come from, on the backs of our small business owners, primarily our Black, Asian, and Hispanic small businesses.
Thanks, Ramiro. Shiling, coming to you next. The pandemic hit AAPI business owners hard on the economic front, and they suffer as well from the consequences of what can only be described as horrifying surging anti-Asian bias. From your work with AAPI entrepreneurs across the country, did it surprise you that only 1 in 5 AAPI business owners has sufficient capital to fund all kinds of core activities like marketing and hiring, and that only 1 in 3 are confident that they could get external financing to make these investments in growth?
Yeah, Tammy, thank you very much for your great presentation. And I especially appreciate your mentioning about there's still a growing number of violent incidents. For the past 2 years, AAPI community has been dealing with 2 viruses, COVID and anti-AAPI hate. From 2020 to 2021, number of hate crimes against AAPI is about 360% increase. And almost 40% of the incident happened at a place of business. So it really makes the survey so critical to use data to reflect economic effects due to those viruses. And again, today, we're so grateful to work with Reimagine Main Street, the USBC and USHCC, especially all the efforts that went into developing this important survey. I take my hat off to Ron and Romero for their efforts, and also especially Red for their efforts to lead our minority business communities. We know access to capital remains a top priority for AAPI business owners, and we work with PayPal and Wells Fargo closely to share the resources, and access to capital opportunities to our AAPI small business owner for the past years. And we spend a lot of time discussing the importance of access, but we have been missing a conversation about the trust that minority businesses have in identifying and accessing those capital resources. To answer your question, I was not surprised to learn that the majority of AAPIs have insufficient capital to support hiring and investments. but it is always shocking to learn how large of a disparity there is. We have learned, yeah, thank you.
Ron, coming to you. So the survey found that almost 2/3 of the Black-owned businesses said that they would be unlikely to finance a contract or a purchase order. You and your team at U.S. Black Chambers have been actively engaged in advancing supplier diversity and connecting business owners to contracting opportunities. What do you think the findings mean for those efforts?
Great question, and thank you for having us this afternoon. Thank you to Reimagine Main Street, as well as my peers, both Romero and Chaling, for the opportunity to have this conversation. And I want to say it is really positive because over the last 2 years, we've had this conversation about access to capital more than I've seen in my lifetime as a business owner, as well as an advocate. If you ask a business owner their top concerns, they will say access to affordable, available, and accessible capital. In many of our communities that we represent, both the Hispanic and the Asian communities, there aren't banks in our communities. There aren't banks in our zip codes. And for our businesses, many times, it's difficult to find available, affordable, and accessible capital. When you talk about the last 2 years, in our community, we heard a lot about the 41% of Black businesses that closed. We did a survey of our own, and 2 findings really came about. The first one was 70% of those businesses said that the reason that they went out of business was lack of information. And so to have conversations like this and to have leaders like this, to really be able to have a conversation about how do we go and find the capital, the needs of our communities and of our businesses is extremely important. But the thing that we don't talk about is the resilience of our businesses. Of that 41% that went out of business, it represents roughly 442,000 businesses. 70% opened up a second time. So they closed their doors and they reopened. 38% closed and reopened a third time. Roughly 18% closed and reopened a fourth time, and roughly 9% opened up a fifth time. And when we asked those businesses what the challenges were, it was exactly what the study and the results found. Many of them were just saying, hey, I had to close because I was waiting on accounts receivable. I could not pay and make payroll. I couldn't purchase additional inventory. I couldn't meet the demands of my contract and my customer. And many of those needs were under $10,000. When you talked about the payroll protection plan, and both Romero and Chaling and I have had this conversation multiple times, it really was not set up for our businesses. For the businesses that did not have large payrolls, that did not have large inventories, it was difficult for the majority banks to make the small business loans that many of our businesses faced because they were getting paid based upon the size of that loan. And so if there was a $5,000 business loan versus a $50,000 or $500,000 loan, the bank was interested in having the conversation with the larger loan to be able to fulfill their portfolio. And many of our businesses missed out on a great opportunity to be able to find the capital that they needed. So the U.S. Black Chamber is really looking at partnering with our particular businesses. You mentioned that many of our businesses don't know the CDFIs. They don't know the minority banks in their communities. And when we talked to the Black-owned banks across the country and we had Black businesses, there was just no connection there. There was no real outreach from a CDFI to go make new business relationships. And so the U.S. Black Chamber says, hey, we have 380,000 businesses members, and the majority of them say they are looking for access to capital. We also have partnerships with both PayPal, the Wells Fargos, as well as the Black-owned banks and the minority-owned banks across the country. And so what the U.S. Black Chamber is doing is we're creating our own portal that says, hey, regardless of where you are in the country, you can fill out a loan application. If you need less than $25,000, we'll point you in one direction. If it's $25,000 to $500,000, you'll get another direction. And if it really is about investments, which we don't have a great deal of conversation about, many of our businesses say, I'm not interested in a high interest rate loan. I need someone to invest in my firm so that I can have long-term sustainability, long-term opportunities, so that when they do face that challenge, when they do face that growth span or the next virus or pandemic, they have the ability to be able to make it through difficult times and have a real plan for growth and long-term sustainability.
Thanks, Ron. You mentioned two things that are critically important, not just among Black-owned businesses, but across all of the small businesses, AAPI, Latino, and all small businesses, and that's the resiliency. You also rightly pointed out that, frankly, the attention to these issues that we have experienced over the last while has made a difference. I loved hearing the things that USBC is doing. Question for you, and then coming to you, Xiling and Ramiro. What should the SBA and the financial institutions be doing alongside the work you all are to capitalize on the trust, to meet the needs of business owners, and to grow deeper relationships to serve more small businesses?
Great question. And I have always been a big advocate of the SBA. I believe, as a former business owner, they have great programs. Part of the challenge is making sure that those programs are reaching the small businesses, the minority businesses across the country. And so we are extremely proud to be partnering with the SBA through the Community Navigator program, because it really allows us to go and reach those businesses where they are to provide the information that they need. We are also partnering with what we call the National Association of Black-owned Broadcasters, which are the Black radio and TV stations. Many of the times, our businesses weren't getting the information that they needed because it just wasn't being shared on mainstream media, as well as the media and where they go and get their information. As a trusted partner, we just got to make sure that what they are doing is being is reaching the business owners that need the information the most.
Thanks, Ron. Xiling, what recommendations would you make to the SBA, to policymakers, and to anyone who can help address these challenges?
Yes, Tammy, thank you. We have learned in our previous surveys with Reimagine Main Street that the AAPI business don't apply for financial relief because they are unaware of the opportunities. They don't think their business qualify for them, or in some cases because of language barriers. So National ACE has carried out many successful grant program and technical assistance program try to close this gap, because it is clear there's more work to be done. And we are very fortunate. I'm very honored to be served as a council on underserved community at the SBA. So we have been working extensively with the agency, like SBA, MBDA, Department of Commerce, and Treasury to collaborate with our 100 affiliate AAPI chambers and partners on how we can best work together to serve the AAPI businesses. And through those conversations, we have made some progress. National chambers, such as the National ACE, USBC, and USHCC, have a wealth of knowledge and expertise related to the specific nature of those businesses we represent. I think the best way for institutions, policymakers, and lenders to grow deeper relationship with the AAPI and other small minority business community is to actively engage with trusted voices that have long served the target communities, whether that is through surveys, town hall, or by hosting roundtable discussions. Engagement is critical for learning about pain points and for improving the quality of existing resources so that they can better serve businesses. For the past 2 months, National ACE has conducted over 10 roundtables throughout the country with the local, state, and federal government, including SBA and BDA, to share resources to small business owners and plan to do more in the future.
Thank you, Xiling, for those thoughts and for the work that you all do. Ramiro, you get the last word. What, on this panel at least, what should the SBA and policymakers and other market participants know and do?
Well, the three things I would say, and thank you for moderating our discussion, and to Chiling and Ron for their powerful work and partnership. They're my brother and sister in this hard work. I think some of the folks that have joined us have been chatting and also sending notes to us. And I agree with some of them that direct grants, capital grants to small businesses around the country have really been very effective. Most of our small businesses, like Ron said, they apply for grants and loans for up to $20,000, $30,000. Most organizations, large corporate, are not, at least in the financial area, it is not an area where most of those loans are even approved. And so we have had great success working with local governments throughout all 50 states and state governments and corporations to provide direct grants to small business owners in the $5,000 to $10,000 range, in some instances up to $20,000. Big business is really made up of the small business owners throughout this country, all 32 million plus. When we recovered from the Great Recession 14 years ago, small businesses led the way. Small businesses are leading the way again post-COVID and post this inflationary period. So I would just say the best way to help our small business owners is direct grants in that range. It makes the world of difference, and we've seen it be very effective. And that's why I think the level of trust is high for the SBA. We too, like Ron, work on the Navigator grant, and we are trusted, and we need to earn that trust and confidence to provide the outreach services to small business owners that are above from 0 to $1 million in annual sales. So I would just say that's the best way is to give those direct capital grants from local governments and also corporations, using our organizations as instruments and vehicles to get those dollars out there. Thank you so much, Tim.
Thank you, Ramiro. Wow, this was super rich, and we could have a lot more conversation about a lot of topics. I heard from all three of you I heard many things, but three things that sort of come across all three. The first is that this is both a national opportunity and very local opportunities. The second is that none of these problems will be resolved without a lot of dialogue and direct engagement with the business owners themselves, and that your chambers and other organizations are trusted last mile conduits. And the third thing I heard is business owners, we need to get them what they need, and that's the money, whether the money comes in the form of grants or accessible capital, or frankly, guidance that helps them find a different way to find the money, or to reorient the business is exactly what's needed. With that, let me thank you all again, and welcome our next panel, where we will hear from a group of extraordinary lenders in small business, leaders in small business finance and government. So each of our next panelists represents a leading bank, a fintech, a CDFI, and the Small Business Administration. Each of them is personally and tirelessly committed to small business, community, and equity. And so please join me in welcoming Fabrice Coles, who's the Senior Manager for Policy and Research at PayPal, Martina Edwards, who's the Chief Partnership Officer at ACE, or Access to Capital for Entrepreneurs, a nationally recognized leading small business lending CDFI in the state of Georgia, Patrick Kelly, who's the Associate Administrator in the SBA's Office of Capital Access, and Bob Marshall, who's the Business Growth Strategy Executive at Wells Fargo. A warm, warm welcome to each of you. We could not have a better lineup to share perspectives. I, for one, am excited to learn from each of you, and each of your institutions represents important sources of capital for small business owners. Bob, let's start with you. Wells Fargo is among the largest banks in the country, and you are the business growth strategy executive in the Small Business Development Group, where, as I understand it, you're responsible for the team that is focused on meeting the needs of businesses that have about $1 million to 10 million in revenue. Tell us about how you see the importance of trust in that equation and how you cultivate trust with those business owners.
Sure thing, Tammy. First, I want to thank Reimagine Main Street for having us. This is a really important discussion and one that we need to continue to have on a regular basis. I do wake up every day thinking about how to attract small business customers to Wells Fargo. And so, I understand that trust, and we understand that trust is vital to the success of our small business customers. The challenges that we faced in the pandemic and your survey underscore the fact that trust is critical, and sort of embedded in trust is our ability to build deliberate, sustained relationships with all small business owners, specifically our small business owners of color. And we do that, I think, in three ways. First is our relationship model, where our bankers who focus on small business really must understand the customers or prospects that they're talking to. There has to be a relationship where I understand what the small business owner's hopes and dreams are, where they want to take their business, and how we can help them get to a place where we're looking at the different resources we have internally to help them grow, not just to survive, but to thrive. And an example of that is during the PPP process, our small business customers had never experienced having to go through forgiveness. And so we created a forgiveness specialist and paired each small business customer with that specialist so that they could shepherd them through the process. That one-on-one relationship is critical. The second way we do it is by partnering with the three organizations that were on the previous panel. We have great relationships with them. And not only do we want to help them serve their small business owners, their organizations, their constituents, but we also want to learn from those small business owners directly. And so we have various things that we do that we get direct feedback from them. The third thing that I think is important is really us being contributors to the ecosystem. And that ecosystem is important because I think, as the survey has described in its results, and how the three heads of those organizations have described, that there's a sort of an information void. And us being a contributor to that ecosystem for small business owners is going to be helpful, because we've just we partnered with Community Reinvestment USA to do a small business navigator to connect small business owners across the country with CDFIs in their specific markets. So that way, there's a way for them, a resource for them to get to those CDFIs who can provide financing and technical assistance. I think I could talk about this for hours, but those are sort of three things that I think are the most critical.
Super interesting. Relationships with the businesses, relationships with the ecosystem players. Fabrice, as a fintech lender, when you hear those two dimensions, relationships with businesses and relationships with ecosystem players, share with us how you work with business owners and how you work to build trust with them, and how do those dimensions play in?
Thank you so much for this fantastic panel, to be amongst these fantastic leaders, and to be with you and all those in the audience as well. Look, PayPal, as you said, as I like to call it, the granddaddy fintech. It's a well-established payments platform, and small businesses are some of our very most important customers. We run a two-sided network, and so half of that network is merchants and small business owners, so it's just really core to our DNA. And we just know how critical the role they play is in their communities, for their employees and other stakeholders. We humbly accept the responsibility to find different ways to better serve them. And we think that really just kind of takes an ecosystem, we try to promote that ecosystem as much as possible, and that is one way that trust is built. So I love what Bob was saying there about ecosystems, because I think that that's just critical. Government, private sector leaders have to come together to serve communities, and small businesses obviously are key parts of those communities. So I think that's just, first and foremost at a macro level, that's a part of our belief system, is that ecosystems, collaboration, cooperation really helps to better serve all your customers, and small businesses are no exception to that. But more specifically to your question, we have played a role in small business lending for many years. Some of that lending is, of course, informed again by our existing relationship with some of our merchant customers, an important part of our platform. And over the years, over 22 billion in capital has been deployed to small businesses through more than 1 million loans. And we're not done. As a kind of alternative lender, as a part of our overall kind of payments and platform services, we look at different data and criteria to assess kind of creditworthiness. And this has really allowed us as a company to reach communities that, unfortunately, for one reason or another, haven't had that access. And that's, of course, why we're here today. What a fantastic survey! What important findings! So critical to inform policymakers and to inform businesses as they make their moves as well. And I think that trust is going to be fostered if people really take to heart a lot of the things that the survey reflects. That lack of confidence in being able to access capital. Well, what are we doing wrong as private sector, to not help instill some of that confidence? These are critical questions for our business leaders. And I can tell you that the best way to foster trust is to really work with your customers, ask them what they need, and ask them what are the challenges they're facing on a daily basis. And so that's a constant dialogue. But more importantly, like a macro environment with ecosystems of support from government and other private sector leaders really sets the stage very well for that. And so we're happy that PayPal Working Capital is a part of that solution. And we can talk a bit more about kind of our recent work there and in the pandemic as well. But I think at a high level, I just really wanted to emphasize that and kind of underline some of the stuff that Bob was talking about, because that ecosystem is going to be critical to the delivery ultimately of the service. It's not just one provider. It's a provider working with others in the community, other private sector actors and government leaders as well, federal, state, and local, to really drive home an environment that allows us to kind of do that work. And again, there's way too much more to be done. And we're not resting on our laurels, because there are still so many entrepreneurs that lack that access. And PayPal is going to be a part of that solution one way or another for sure.
Thanks, Fabrice. So Martina, I'm coming to you next. We've heard from Bob at Wells Fargo, which is a bank. We heard from Fabrice at PayPal, which is a fintech. You are from ACE, which is another source of capital for business owners, a CDFI. Tell us about ACE. Tell us who you serve from the perspective of business owners, ways that you are similar or different to a bank or a fintech.
Yes, Tammy, thank you so much for the introduction, and good afternoon to everyone. It's certainly a pleasure to share the virtual stage with an esteemed group of panelists. And ACE is which stands for Access to Capital for Entrepreneurs. We are a mission-driven nonprofit lender, CDFI, certified by U.S. Department of Treasury. And that's a fancy way of saying that we give folks a chance when others can't or won't. Through a combination of capital, coaching, and connections, we try to help grow sustainable small businesses in the state of Georgia. Our organization was started by our CEO, Grace Ricks, with a $50,000 grant a little over 22 years ago to serve just 4 rural counties in North Georgia. Today, I'm really proud, we've been able to deploy over $140 million in capital, support over 2,000 businesses and help create or sustain just over 17,000 jobs. And so that is across a 68 county footprint, including Metro Atlanta and North Georgia. We're the largest small business focused CDFI in the state. And who we serve, we can lend to anyone as a CDFI, right? But we have our mandates, and we have a focus on those who have traditionally underserved people and places. So that's women, people of color, low to moderate income individuals, or communities. And an important part of our organization's vision is to decrease the gender and racial wealth gaps, particularly for Black and Latinx communities who continue to face racial discrimination inherent, like in our, even in our modern financial system. How we are similar or different, I would say, is that, you know, my colleagues on the line here and on the panel, we're all interested in serving clients with capital and solutions to help them grow their businesses and figure out how to help them realize their dreams, because in our eyes, right, it creates collective prosperity for not just that business owner, but their staff, and helps to create more resilient communities. I think, you know, how we approach our work may not look the same. So we work outside of traditional banking credit boxes. We have tools in-house as a nonprofit organization that allow us or help us to get to a yes. So whether it's an interest rate buy down, a loan guarantee for those who may have collateral shortfalls to backstop those loans, we try to lean into the opportunity and creatively mitigate risk. And I would say two other differences, so to speak, would be we understand that a key to growing the business is to pair capital with coaching, helping people really figure out what they don't know. We've learned that there is not only a capital gap, the trust gap that we're talking about today, a social gap in terms of your network and resources, and a knowledge gap. So we try to close those as much as possible. And then I would just say, from an infrastructure standpoint, between the differences between PayPal, Wells Fargo, and an ACE, is that the balance sheet, like we're a 22-year-old institution. We've got old plumbing and systems and infrastructure. And so we're smaller. We don't have a deep bench with, you know, CTOs that are trying to solve problems around technology and innovation, but we certainly know that it's a necessary part of growing and scaling and continue to do our work. So I will stop there.
Thank you, Martina. Patrick, you represent yet another position in the ecosystem. You are the government, the SBA. Martina mentioned that they sometimes offer guarantees, and I think sometimes those guarantees come from your programs. Over the last year, thanks to you and a lot of folks at the SBA, you were able to deploy hundreds of billions of dollars of COVID relief to business owners, in addition to the traditional longstanding guarantee programs and others. Were you at all surprised to see the survey results that at this moment, the SBA has both the highest level of recognition and of trust among small business owners?
No, measured simply by the fact that, you know, over the last 24 months, you know, there's an estimated 32 million small businesses, and we've probably touched at least a third of that universe in one way, shape, or form across either a grant, or a forgivable loan, or a direct disaster loan. And so, so, you know, when you originate or support $1 trillion in assets in a, you know, roughly a 14-month period, you will make a market splash and create some brand. So that's all to the good. And I think the other aspect of it is it's not simply just the borrower, but you know, as has been pointed out on this call, that the PPP program in particular widened the traditional distribution channels that were eligible to use that product. So in addition to community financial institutions, fintech lenders were allowed to leverage that. And then, you know, choices that this administrator, Guzman, made with respect to the restaurant revitalization program and how we distributed that particular, the proceeds from that grant by publishing API and embedding that in point of sale vendors. And then within PPP supporting, over 1,500 banks and 2.5 million borrowers request for forgiveness under 150,000 through technology. It's not surprising that people have a good experience. Obviously, there's sentiment when you're going through any process to access capital that's frustrating because you have the desire, you feel like you've made your case, and it's always a question of whether or not the folks with the purse strings are going to open those up. So I did want to just touch on something that Martina said just at the tail end of her points, which I think is really important to this conversation, because it directly relates to the challenge of small businesses and in particular startups in seeking the working capital, which is technology is got to be universally leveraged by lenders, and data needs to be extensible throughout the loan life cycle in order to make the loan decision make sense for the lender, but also to make it efficient and cost effective. And for too long, this problem has been around. We're not breaking any news here today. But I think there's a role for the SBA to play in distributing public utility technology for community financial institutions, community banks, for that matter, all banks. You saw that with direct forgiveness. You're going to see that in short order with an improvement to the lender match tool, and with concepts related to 7A as a service. And so for Martina's firm, the goal is to to create through web application and directly through API service, the opportunity for her systems to embed through API, or for her lenders to access our portal through web application in order to originate a compliant SBA loan on behalf of their customer, and then also to lower the cost of new customer acquisition in the way that the discussions we've had with Ron, for example, at the Black Chamber, which is, he's exactly right. He's got 300,000 sole proprietors by and large that are seeking working capital. And so those leads that his portal generates can go directly through to the back end to find a match with SBA lenders. And as he described, there's going to be different solutions across that continuum that he laid out.
Thank you, Patrick. It brings us back to Martina, actually. Martina, Patrick described the SBA both being well-known and having deployed hundreds of billions, and he just painted a picture of a tech-enabled future. The survey showed us that while CDFIs are sources of capital and trust, as you described, they're not very well known. How do you think that tech-enabled future or anything else could move CDFIs from being the best kept secret in the ecosystem to an integrated and widely known and accessed point in the ecosystem?
Yeah, thank you for the question. And thank you for the commentary too, Patrick, about ways that we can kind of capitalize on the momentum and what you guys have been able to learn through the SBA. I saw the results, and we're certainly, excited that our clients who do engage with us in our sector view us favorably. And I'll say, just to start with that, that's a direct result of and a reflection of kind of intentionality of the organization. Our staff are a reflection of our communities, ethnically. And we have colleagues in rural, suburban, and urban communities throughout North Georgia and Metro Atlanta, as well as now in Savannah with our Women's Business Center that sits there. And so that representation is certainly essential, and we try to build trust in that way with the business owner by seeing them, by recognizing who they are and letting them know that we're high touch and we're not simply transactional through our business advisory support, but there is to tap into other areas and improve where you have folks who don't even know that we exist. I do think we're turning a corner. I mean, it took a global pandemic and cascading economic conditions to get there, but there's certainly been more visibility to our space, excuse me, with, in the historical kind of impact that we've been able to make as an extension of traditional kind of financial systems. So I want to lay out just maybe two things and say that ACE has two main capital sources, right? Lending capital, grant capital. And we borrow capital, we lend it out at affordable rates, it generates a small amount of earnings, and then we repay our lenders. Our grant dollars are essentially used for the educational arm of our work. So while CDFIs are profit making, we are not profit maximizing. And we're talking earlier about the capacity and the dollars and the expertise to be able to, I think Ron mentioned it, he mentioned a media campaign. So that's one thing. I think there's an opportunity right now to figure out how our partners or how the ecosystem can come together to amplify our work through some type of in-kind, I'm going to say, media and commercial campaigns who partners have those expertise. But then our ecosystem is essential. So if the SBA has the bullhorn and the platform and is more trusted from those survey results, then it's a unique opportunity to have the SBA now provide more information about CDFIs because it's coming from a trusted source. Other things that we were able to do during the pandemic is a community foundation came together here in Atlanta with a lot of ecosystem partners and ran a campaign around a walk together. And it was about how we could support Black businesses and why it was important. And then there's SOAR, the Southern Opportunity and Resilience Fund, that's basically matching small business owners with CDFIs across 15 states and Washington, D.C. And this is really a way to make it a path of least resistance at the end of the day for the business owner, in terms of if the business owner has a need for capital, they have a broken oven at the restaurant, they're just trying to figure out, how do I get that fixed quickly? So, when ecology, we've got to figure out on our side, which we're saying, how do we reduce the burden of work on our teams through technology and increase capacity on all fronts around data, systems, and infrastructure.
Thanks, Martina. I am mindful that we are short on time. I want to ask two more questions, maybe in slightly rapid fire mode. The first is to you, Fabrice, and that is, as you think about being on the other side of the infrastructure question and also a provider of small dollar loans, what opportunities do you see to better meet the needs of businesses and connect folks? And last word will be to you, Bob, and that's, we've talked a lot about what the ecosystem players should do. What's your guidance to business owners?
So just real quick, being respectful of time, I think, I just want to double down on kind of what Martina was saying about the work of CDFIs. PayPal has worked with CDFIs in the past and is exploring ways to deepen that work with more CDFIs and MDIs. We've had these partnerships even before the pandemic, but certainly deepening during the pandemic to improve the delivery of services via CDFIs, given that very high touch specialization that they provide. And so I think that that's just one way. That I think everyone on this call should really, really think about is, the ecosystem of support for MDIs and CDFIs, which, their business models are to serve these communities that have lacked access in the past. And so, finding a way, if you're a big business, if you're a small business, to engage and support your local CDFIs and MDIs is absolutely critical. And we saw that take place during the pandemic from SBA, from the US Treasury, and also from other large businesses. And that really needs to continue and get scaled up because of some of the technology issues, because of some of the access issues that we've discussed here already. So I think that as we explore next steps, I think it's critical on two fronts. One, businesses, government need to find a way to continue to support the CDFI MDI sector. And then the second piece of it, for those of you home gamers watching this at home, continue to engage these fantastic organizations represented by this coalition so that they can lift your voices up here in Washington to ensure that policymakers continue to set the parameters for that ecosystem. because the leadership from the government at the federal level is incredibly important on these matters. And it really sets the tone for large businesses and other businesses to engage. And so, there's a lot more to discuss, but I'll cut it short there. We just want to continue to be a partner and, again, support this important ecosystem. But just go ahead and love on your local CDFI and MDI because they do incredible stuff.
Information is power. Please reach out and seek the information in your local areas. And that's small business development centers. That's your local government's economic development group. That's understanding, the chambers. Everybody has information to help you. Second thing is do your homework. If you're going to a bank or you're going to a financial institution or a CDFI, make sure that they want to get to know who you are. Make sure that it's not a transaction. Make sure that you want to begin to build a relationship so that that relationship is larger than whatever the credit opportunity that you may have. It's got to be for the long haul. And last but not least, talk to each other. We all have information that we need to share. We need to engage with each other from small business owner to small business owner to really help ourselves understand what information is out there and where to go to get the capital that we need.
Thank you all. Let me say on behalf of everyone who's dialed in and all of our teams, thank you all for this super rich and important conversation. We could go for a very, very long time, but we are at time. I thank each of you. And now let me pass it back to Rhett to close us out.
Well, thank you so much, Tammy, and thanks to both of our panels. And I will just be brief because we are running out of time, but it is my pleasure, especially during this month where we celebrate the amazing contributions that the whole API community makes, not only to our country, but in particular to our small business and entrepreneurship ecosystem. So with that, it's my pleasure to turn it over for closing remarks from Congresswoman Judy Chu.
Hello, I'm Congressmember Judy Chu from California's 27th District, and I want to thank Reimagine Main Street and your partners, National ACE, U.S. Black Chambers, Inc., and the United States Hispanic Chamber of Commerce for inviting me here today to celebrate Small Business Month. Small businesses are the backbone of our economy and were some of the first and hardest hit by the COVID-19 pandemic. As a member of the House Small Business Committee, I was proud that Congress acted quickly to get much needed funds to the hardest hit businesses right at the start of the pandemic by extending the Economic Injury Disaster Loan or EIDL program and creating brand new relief programs like the Paycheck Protection Program or PPP to help businesses keep employees on payroll. My colleagues and I also fought hard to ensure that pandemic aid to small businesses was distributed equitably. That is why when we saw too many PPP loans going to the biggest businesses that had pre-existing relationships with major banks, Congress created a special $60 billion set-aside specifically for the community financial institutions and small lenders more likely to have relationships with underserved small businesses. And thanks to the American Rescue Plan signed into law last year, more entities were made eligible for PPP, more businesses received EIDL advance grants that do not need to be paid back, underserved communities have been connected to assistance through the new Community Navigators program, and restaurants and bars were provided with a historic new grant program, the Restaurant Revitalization Fund. Now, as we focus on our long-term recovery, we must ensure that access to capital and development assistance reaches every small business and entrepreneur in every community. This means not only expanding the government's core lending programs like 504, 7A, and microloans, but also finding ways to ensure aid makes its way into the hands of the small business owners who face the highest barriers. That's why I am working to introduce legislation to authorize the Community Advantage Loan Program at the Small Business Administration, which specifically targets underserved businesses who are ready to grow but have trouble accessing private financing and traditional loans. So thank you again for inviting me to speak with you, and I look forward to continuing to work with you all to ensure our small businesses can thrive in the post-pandemic economy. Thank you.
With that, thank you again to everyone who has joined. A hearty thank you to our panelists. The webinar is now closed.